Hello and welcome back to Green Money Momentum. I am your host, Trevor, and we are here for another daily talk of stock. And the overall markets bled pretty bad today, so we had a really bad Friday, and this just continues the downtrend that we have been seeing in the markets. And this is sparked from inflation, interest rates, and tariff concerns. So the three-headed dragon of fear, uncertainty, and doubt that we've been talking about on this channel, well, it looks like it has hit us again. And so the overall market had a pretty nasty sell-off. We saw some pretty big plays get eaten up today. We see Apple down 7%. We see Nvidia down 7%. We have JP Morgan down 8%, Amazon down 4%, and Tesla down 10%. But you could see this overall chart is just super red. So hardly any plays were in the green today. And again, this is because of the fear, uncertainty, and doubt around tariffs, interest rates, and inflation. And so to start this, we also had Jerome Powell talk today, and this is what he had to say about the economy.
Like we don't need to be in a hurry. It feels like we have time to, yes, it feels like we don't. No, I mean, it's like I said, you have inflation is going to be moving up and growth is going to be slowing.
And so you heard Jerome right there, higher inflation and slower growth. He also said that there is no hurry to cut the interest rates, but Trump disagrees on that. On Truth Social, Trump said that this would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He is always late, but he could now change his image and quickly. Energy prices are down, interest rates are down, inflation is down, even eggs are down 69%, and jobs are up, all within 2 months. A big win for America. Cut interest rates, Jerome, and stop playing politics. And so this just continues the feud that we have seen with Trump and Powell. If you remember when Trump was president in his previous term, they also did have a little bit of a back and forth when it came to interest rates before we had the historic cut down to 0%. And what has caused a lot of the bleeding in the markets this year is actually what originally happened in December, and that was the last FOMC meeting of the year when the Fed talked about how they were going from 4 rate cuts this year to just 2. Ever since that announcement, the markets have been bleeding, and we know the markets react well to lower interest rates as it is more stimulative for the economy. And so the battle between Jerome Powell and Trump when it comes to interest rates only continues. And that isn't the only conflict that Trump is having right now. We also did see that China is retaliating with a 34% tariff of their own. Trump also responded to this, and he said that China played it wrong. They panicked, the one thing they can't afford to do. And Trump did also write on Truth Social that there has been an executive order signed to keep TikTok up for an additional 75 days. He knows that China isn't necessarily happy with the tariffs. He wants to continue to remain in good faith with China, and he looks forward to working with TikTok and China to close the TikTok deal. And so I think this is a positive for 2 reasons. One, we are going to have TikTok for an additional 75 days, so an extra 2 months of TikTok. I think that is a positive. A lot of Americans are on TikTok and earning income through TikTok, myself being one of them. So I am happy for my revenue stream in TikTok to continue. And then I think this is also a positive because this shows, even though we have had some escalating tensions when it comes to the tariffs, that a lot of these tariffs could be just a bigger part of negotiation and a bigger part of, like Trump talks about, the art of the deal. And so even though the tariffs have seemed horrible and a lot of people are saying that this is the beginning of a long trade war, World War III, all these different things, we could see that Trump is still trying to have positive negotiations with China. But that is very small compared to the bigger picture and what we are really seeing in the markets. And so the overall market sentiment is not great right now. And when we look at the fear and greed index, we could see that we are at number 4 out of 100. So that is really bad. We are at some of the lowest levels that we have seen since COVID. And so a lot of individuals have been worrying, and the word recession has been being thrown around, and understandably so. When we look at the NASDAQ and also the S&P 500, we have officially went into bear market territory in the NASDAQ, and we are flirting with that level with the SPY. So we're just a couple percentage points off being in an official bear market in the SPY, but we have retracted more than 20% from the highs that we have seen in the NASDAQ. And so what is also worrisome is we could see just on the trends that we have been in a downwards trend most recently, but with today's gap down, it broke the trend even further down. And so we were in this consistent downwards trend, but now we have broken even further down. What is positive though, if you look past all the fear, uncertainty, and doubt, just just on a technical analysis point of view, if you are just getting into the markets, or if you do have extra capital, this could be a good spot to start to dollar cost average. Nobody has a crystal ball, and nobody could predict what the markets are going to do next. But just on a technical analysis point of view, and just looking at the triple Qs, we could see that we are pretty oversold on the MACD, and then we are also very oversold on the RSI. And so we are at a very low spot, indicating that we are oversold on these indicators, and that this may be a good spot to join. Now, with the markets and with the way they have been crashing, trying to catch a falling knife is a very hard thing to do. The markets may continue to retract, but the markets will not retract forever, as the markets are perpetual. They always continue to go to the right, whether they are going up or down. Right now, they have been going down, but that doesn't mean that there may not be a flip soon. When we look at the history of the bull and the bear markets, now this chart only shows to 2019. But we know in 2020, we did have a swift recovery as well. So one of the swiftest with the great recovery. But overall, just looking at the bull and bear market history in the US, we could see that the bull markets always last longer than the bear markets. And typically in the bear markets, they are pretty swift. And so we could see some bear markets here, this one in the 80s to 90s, only lasting 3 months. We know the recovery in 2020 was one of the quickest recoveries we have ever had. And overall, I do believe that we will see a recovery soon enough in the markets. The markets have overall this year been facing a lot of fear, uncertainty, and doubt around the three-headed dragon when it comes to inflation, interest rates, and then also tariffs. If any of these three factors get better, I believe that we will see a strong recovery in the markets. And so overall, I am very excited about what we are seeing in the markets. I think these are tremendous buying opportunities. Again, nobody could catch a falling knife, so I am not saying this is absolutely the bottom of the bear market and we will see a recovery as soon as Monday, but I do know that a recovery is coming soon. I am very well prepared for these markets. I am not over leveraged. I have a lot of cash on the sidelines, and I am going to continue to dollar cost average into great buying opportunities while they are present and in front of us. Recently, the bears have gotten more hold of the market than the bulls, but the sentiment can flip at any moment. And so during all of this, Trump may seem like a madman, but let's remember the art of the deal. There is a bigger reason behind all of this, and Trump is just trying to patch up the economy. He has been talking about this for a long time before he even started running for president. You could see from like 30, 40 years ago, he was talking about how the United States was being ripped off by foreign countries all the way back then. And so on his election campaign, he talked all about tariffs. He said he was going to do this. He said he was also going to improve border security. He has already improved border security, and now we could see that he is very serious about these tariffs. But just like Doge and how Doge has helped to cut some government spending, I believe that in the long run, this is a positive. Sure, in the short term, this has a lot of individuals frazzled, and it has the whole world kind of uncertain about foreign trade, but I do think things will get better, and I am overall excited to see what will come for the future. And so, yes, in the short term, these tariffs have caused a lot of uncertainty in the economy, but I do believe as we go through this year that these tariffs will become less of a concern and things will work themselves out. Whether these tariffs are just part of a bigger negotiating tactic by Trump, or whether we are really going to make fair trade more balanced and the overall economy is going to shift a lot when it comes to overall trade. I do think things will get better, and with these tariffs too, if things do need to switch up and change, we have already seen a lot of investment from big companies in the United States. And so we have seen that Apple says they're going to build a plant out here in Texas. We saw Hyundai recently talk about building a plant out here in Louisiana, and then we had the big $500 billion Stargate investment in January. And so overall, this is just incentivizing more companies to come out here into the United States. So that is one factor. The other thing that I think will make markets get better is when the Fed finally does cut rates again. The markets overall are very influenced by the Fed's decision on rate cuts. And so historically in 2020, when rates were at zero, that was when we saw the most pumping. A lot of these problems in the market started in December when the Fed said that they weren't doing 4, but just 2 rate cuts. And so once we finally do get a rate cut and money could be more stimulative, we may see a little bit of a pop. But regardless, like I say, it is very hard to be able to time the bottom in a bear market and to catch that falling knife. So I am by no means trying to catch the absolute bottom, but I am going to dollar cost average and prepare myself for the next bull run coming up, because I am very confident that it will come at some point. It's just things will take a little bit of time. But that's just my overall opinion. I would love to hear what everyone else has to say. So please drop a comment in the section below on what you think about the markets. Please leave a like and please subscribe to the channel if you haven't already done so. Thank you guys so much, and I'll see you in the next video.